Senator Cynthia Lummis just dropped a warning that should terrify anyone who cares about American financial leadership. 90% of crypto spot trading and 80% of digital asset futures are already happening overseas. And if the Clarity Act fails, she says those companies and that capital are gone for good. They won't come back. The numbers are staggering. Out of roughly $2.5 trillion in daily crypto spot volume, less than $250 billion touches U.S. soil. For futures, the gap is even worse, over $100 billion in daily volume, and barely $20 billion happens on regulated U.S. exchanges. The United States built the global financial system. And we are watching the next one get built somewhere else. How did we get here? It started in 2022 when the SEC began its regulation by enforcement campaign. Instead of writing clear rules, the agency went after every major crypto company one by one. Coinbase, Kraken, Binance US, Ripple, each lawsuit pushed more activity offshore. The message was clear: if you're a crypto company, the US is not open for business. The numbers prove it. In 2021, US exchanges handled about 40% of global spot volume. By 2024, that number had collapsed to under 10%. Singapore, the UAE, Hong Kong, and the EU all wrote clear rules and watched the volume follow. The US wrote enforcement actions and watched the volume leave. The Clarity Act is the last chance to reverse this. The bill creates a clear regulatory framework. The CFTC oversees digital commodities like Bitcoin, the SEC handles securities, and exchanges get a defined registration pathway. It passed the House in July 2025 with a 294 to 134 bipartisan vote. The Senate Banking Committee advanced it in May 2026. But it's stuck. The bill needs 60 votes in the Senate. Majority Leader Thune said on July 23 that the bill doesn't have the votes to pass before the August recess. The window is closing. The Senate leaves after August 7. If it doesn't pass now, the next real chance might not come until 2030. Lummis is blunt about the stakes. She said America built the dollar-dominated financial system that anchored global stability for a century. The Clarity Act ensures we build the next one. The time to act is now, before Beijing decides it will. China is already moving. The UAE is already moving. Singapore is already moving. The US is still arguing about who polices the president's crypto wallet. The irony is that this bill has something for everyone. For developers, it shields open source code from money transmitter laws. For stackers, it creates statutory protection for liquid staking protocols. For exchanges, it provides a clear registration path. For consumers, it mandates customer asset segregation in bankruptcy. For law enforcement, it gives the Treasury new sanctions authority to freeze suspicious transactions. But the clock is ticking. Every day the Clarity Act is delayed is a day American companies consider building their future somewhere else. Lummis said it best: the coming weeks are likely the last real chance we will have for years to get this right. The question is simple. Does the United States want to lead the next era of finance, or does it want to watch from the sidelines while other countries write the rules? The Clarity Act is the answer. And if Congress doesn't act now, the industry won't wait. It's already leaving. If you want to stay on top of this story, hit subscribe. The Clarity Act vote is coming, and we'll be covering it the moment it happens.